Hi there, Frank Flegg here, founder of Ethical Property Partners. In this video, I'm going to be explaining to you how Control Now, Pay Later works as a strategy. There are actually 7 benefits, 3 to the vendor and 4 to you, of a Control Now, Pay Later strategy. And in this episode, I'm going to teach you all 7 of those benefits, because it's only when you understand those benefits that you can communicate them to the vendor, and it's only when the vendor understands what's in it for them that they are able to say yes to your offer, and you can start doing these amazing, often no money down deals where you control properties now and pay for them later. And when we say later, we're not talking 3, 4, 6 months later, we're talking 10, 15, even longer years later. So 10, 15, 20 years later, where you're actually finishing paying for the property. So let's start with a misconception. Most investors think that buying property, especially sophisticated property investing, SPI businesses, are all about getting discounts on property. That's not the case. Most of our deals are below market value, absolutely, and that can be 25, 30, 35, even 40% below market value. This year we've had a couple of 50% below market value deals already, and that is in its current condition. That's not, oh, it's a 400 grand house and we've got it for 250, but there's 150,000 pounds worth of work to do. Not that. We're talking about a 400,000 pound house where the client, the EPP franchisee, is picking that up at 200,000 pounds in its current condition. Some of these are ready to let properties that don't require any works at all. So you've got the below market value investing, and that's sexy, isn't it? You can't look at that and go, wow, 50% off, and you're buying that today with all that equity in it. It's attractive to anyone. It's quite sexy. People get excited about it, you know, those headline figures. And these are RICS valuations, not our valuations. These are a independent RICS valuer coming out from the instructed by the lender, saying that the property is worth double what we're paying for it. Quite remarkable. And understandably, people get fixated on that. But actually, a significant proportion of the transactions that we do are not below market value. We actually pay market value or higher than market value, but at a point in the future. And that's what I want to talk to you about today, controlling the property now and paying for it later. So let's hone in on the 3 benefits to the vendor, because ordinarily, if you're being pragmatic about this, why would a vendor who could sell today and get paid today, figuratively, of course it takes 6, 9 months to actually get paid for a property that you put on the market today, but they could be paid relatively swiftly for a property. Why would they choose to be paid in, let's say, 10 years' time? Well, of course, if it's like for like, they're getting the same amount of money and they could sell right now at market value, they would do so. But we're talking about motivated vendors who can't do so. Perhaps they need more than market value for a property, which we can pay more than market value on a Control Now, Pay Later strategy. Or perhaps there isn't a ready market to buy it now. We're negotiating with a couple of portfolio landlords at the moment. One of the landlords has got 50 properties, all held in one company. There isn't a ready market to buy a company that holds 50 properties. That's a mammoth task. Even to finance that could cost £100,000 just to get new mortgages on them. And then you've got to value them all. That's probably another £25,000. It can get really, really costly to do these types of transactions if you're not set up for it. And lots of landlords are not set up for selling their properties. They never really gave a second thought to it, but now they're in a situation where perhaps they've over leveraged and they can't sell easily. Perhaps they've got properties that are really hard to put in a box, you know, properties where you've got a flat and you've got a bit of a HMO and then you've got a self-contained unit over here, and it's all on one title and it's not mortgageable because it's got more than one kitchen. And when they try and put that on the open market, no one wants to buy it. Well, of course, apart from us, we want to buy it. But a Control Now, Pay Later strategy is often the best way of monetizing these properties. So let's talk about these 3 benefits to the vendor. The first is that they're going to get maximum value for their property. They're going to get market value, even above market value. I've paid 30 I think it was 35% above market value for one property that was on a 15-year agreement. So we took control of the property, we paid a monthly amount, and we are completing the purchase 15 years later. And that is an example of a control now, pay later strategy. So the first is the vendor's going to get maximum value for their property. No one else is going to pay 35%, 30% above market value. No one's going to pay market value for a property that has failed to sell on the open market for 2 years. And of course, by definition, it's failed to sell on the open market, which means no one's prepared to pay it unless you are. So control now, pay later is going to give the vendor maximum value for their property. They're going to get more from that strategy than they are from any other strategy. Secondly, they're going to get cash flow from the deal. Now this is critical. I've never done a control now, pay later strategy where there's no cash flow for the vendor involved. So let's use an example transaction where you've got a property that's bringing in £1,000 a month rent, and it's an unencumbered property, so there's no mortgage on the property, and you're going to be paying over a period of 10 years £500 a month for the property, and then you're going to pay the balance of the purchase price. So let's just say it's a £400,000 purchase price as an example. £400,000 purchase price, and there's £1,000 a month cash flow in it. So you take control of the property. Perhaps the landlord is tired of the property, or perhaps the vendor is tired of the property. Perhaps they want to go live with family, perhaps they want to emigrate, and for some reason they're not able to sell the property on the open market, or they don't want to sell it on the open market, even though it's unencumbered, and they could perhaps sell it for £300,000 now or £350,000 now. Perhaps it's only worth £300,000 or £350,000. Perhaps they've got 4 children and they really like the idea of giving £400,000 to their children, £100,000 each. And you might think, oh, that's crazy. Why would someone do a 10 or 15-year agreement just to give their children a bit more money? Stranger things have happened. I've had exactly that reason given to me by a vendor, and they were willing to go into a 10 or 15-year agreement. And the answer was, I've worked so hard for my property, Frank, I want my children to get every penny from it. And that makes complete sense to me, complete sense, and it does to vendors. And who are we to disagree? Our job is just to provide a solution that gives the vendor what they want. And so in this example, we're giving them £400,000 for the property, which could be substantially above market value. Let's do it over 10 years. We're going to let the property out for £1,000 a month, but we're going to give £500 a month to the vendor. Now, lots of people miss this, but that £500 a month is actually 100% repayment. There's no interest rate here. And so we're in effect getting a £400,000 interest-free loan over 10 years from the vendor. And when you do the math on that, it's unbelievably advantageous to us. So for 10 years, 120 months, we're going to pay £500 to the vendor. At the end of the 10 years, we've paid 120 payments, £500 a month. That's £60,000 to the vendor. So now we owe them £340,000. But here's the thing. In the next 10 years, what do you expect to happen to property prices? Well, if you look at the last 100 years, there's pretty much no 10-year period where property hasn't substantially gone up in value. And so if that property's gone, even in a very pessimistic perspective, from 400,000, or I think we said 350 or 300, up by perhaps 200,000, so now it's worth 500 or 550, that would be a fantastic improvement on the £340,000 you now owe the vendor, because we've paid off the £60,000 over time. And if you did this over 15 years, then of course you've now paid off £90,000, etc. So what happens is you've got the purchase price here, the value of the property goes up and up and up whilst you're paying off the purchase price. So your equity grows and grows and grows over the 10 years. So the question to ask the vendor is not, how about I pay you £500 a month? And that's what people get fixated on. I've got £1,000 so I can pay you £500 a month. Not that. The question to ask the vendor is, if I gave you the £350,000 now that the property's worth, what would you do with that? And lots of vendors haven't really thought about this. They just put it in the bank. And the beauty of the current situation is interest rates are so low. And so you can actually work out for them, oh great, so at current interest rates with £300,000 in the bank, that would actually be making you X amount per month. And when you work it out, it's peanuts. It's maybe £100 a month, not even, depending on the sums involved, depending on the interest rate. But it's often really, really small amount, and they realize that, God, this isn't very much at all. And then when you use the contrast effect, so this is a sales technique that we use, you use the contrast effect between that income from the interest on their savings once they've sold if they were to sell on the open market, remembering we're giving them £400,000 and they could perhaps only sell for 300 or 350. When you show them the contrast effect of the interest on that money in the bank compared to our repayments, they're really, really pleased about that, because now they're getting £500 instead of 50 or £100 a month. So they get a monthly cash flow which is much higher than they would do if they sold the property and put the money in the bank and tried to live off the interest. So the first benefit for the vendor is they get maximum value for the property. Secondly, they get a monthly cash flow. And thirdly, they can literally hand the keys over today. We can have all of the legals done within a few days if required, because there's no searches to do, there's no finance to acquire. It's a very simple transaction, simple from the perspective of, if I agree with the vendor that these are the heads of terms, this is what's going to happen, the lawyers can turn that into a legally binding agreement in just a few days. Now, let me be clear, often it takes 4, 5, 6 weeks, because the lawyers like doing what lawyers do, and there's no need to push it through. But if someone needed to do this quickly, we could do it inside of a week, no problem at all. So they can give the keys to us. They can forget about the maintenance. They can forget about any of the bills on the property. Now, I've used an unencumbered example, but perhaps it's mortgaged. Perhaps there's another 15 years of mortgage on the property. They can forget about that. We can pay that for them as well. Of course, that would change the financials and the monthly payment and perhaps the purchase price as well. I would encourage you to take a look at our episode on the deal equalizer. The deal equalizer explains how you can work out the purchase price, the period of time that the property that the deal goes on for, the monthly payment, the down payment that you might make, whether it's repayment or interest only or a combination of the two. All of that is covered in the deal equalizer. So go check out that video if you want to understand how to put these deals together. But in this video, I'm talking about the benefits and the reasons for doing this. So the vendor is now able to forget about the property completely. No liabilities of the property ever. So they can, it's as if they've sold it, they just haven't got the money in their bank account yet. So they've got rid of all responsibility. They've got a monthly cash flow for 10, 15 years. This can be a willable asset as well. So if they pass away during the term of the agreement, and this happened recently on a property where the gentleman that we had entered into the agreement with, the owner, had passed away. It's going through probate at the moment. The people that are inheriting, the children that are inheriting the agreement are just carrying on getting their payments. So it's a very simple, that's always a concern of people. What happens if something happens to me? It's just the same as if they had the money in the bank. The people that would have inherited the money inherit the agreement. So those are the 3 benefits for the vendor. What about the benefits to us? And there are 4 of these, 4 benefits to us. So the first is you're getting cash flow now. So you're taking control of a property and you're getting instant cash flow. In the example I gave, we're paying £500 a month from our £1,000 income. There's £500 a month left over for us. Obviously, I'm talking net income, there'll be bills, etc. but there's instant cash flow. And often we'll do this on a property where there's high monetization. It doesn't have to be. I've done this on single AST properties. So I've done this where there's just a couple living in a small property themselves. So that example, that property makes me, I think it makes me about £220 a month. I've been to the property once since taking control of it. I don't own it. I've taken control of the property. And the tenants in there have been paying, I think they pay £400 or £425 a month. I pay the landlord about £170 a month, and there's about 220 left over for me. That's every single month, and that's a 15-year agreement, which, if you think about it, you think £220 a month for 15 years, but quite a lot of work, Frank, to sort that out. I had to go to the property once. It was like an 8-hour round trip. I had to sort some paperwork out. I've had to instruct a letting agent, etc. But I've got over 60 of these properties. And if they're all bringing in £100, £200, £500 a month, that soon adds up to a really healthy, relatively well leveraged income every single month. And so the first benefit to us is cash flow. Cash flow each month, which is what we live and die by. It's like the driving principle of an SPI business is cash flow. You need more money coming in every month, substantially more money coming in every month than you're spending out. And that enables you to invest in your marketing, enables you to invest in your team, which means you can go find more deals which bring in more cash flow. And it's like a positive spiral. My kids play SimCity. Some of you will remember that from the 90s. They've changed the name on it now, but I was watching them play it the other day, and it's the same. I was looking at it and I was thinking, this is like Monopoly, which is like an SPI business, whereby you buy properties and in SimCity you build blocks of accommodation, and all your little sim people come and live in it, and they pay you rent, and you can see, well, they pay taxes in SimCity, and in Monopoly you charge rent, don't you? But it's the same principle, and you can see it was red, it was a negative number, and they were losing money. My kids were losing money because they're in negative cash flow. And when they got to a certain number of people living in their town, it turned green, and then the green number grew and grew and grew until they were getting thousands of pounds every month additional money, positive cash flow. And I thought to myself, and all of a sudden they could start building attractive stuff, so they could start building parks, and they built a theme park and stuff, and now even more people wanted to come in and live in their town. It's the same principle with your sophisticated property investing business. You've got a few properties that start giving you positive cash flow, and now you can do your direct to vendor marketing from the cash flow from your properties, and now you get more properties, so now you've got even more properties, so you can do more marketing, and now you're spinning off such large amounts of money that you can actually go and buy cash properties in a given month because your cash flow is that great. And now when you're buying unencumbered properties, you get even better return on those because you haven't got the mortgages to pay, and now you've got even more cash flow, and it snowballs. It just gets healthier and healthier. And that's what we help our clients to do, to build sustainable cash flow positive businesses, and a control now, pay later strategy is a brilliant way of achieving that. The second benefit to us, there's 4 of these, right? The second benefit to us is it's normally a no money down deal. So you sign the paperwork, you take control of the property, and I've deliberately not said whether it's a lease option or an exchange with delay completion or vendor finance. It doesn't matter what the piece of paper says. It's the principle of controlling the property now permanently and paying for it later. The lawyers can work out the best way of actually doing it to minimise stamp duty, to minimise capital gains tax for the vendor, to maximise your cash flow, to maximise your safety, to maximise the vendor's safety, etc. So it's normally a no money down deal. Now, not always. I'm doing one transaction at the moment where I'm purchasing 25 properties, and the landlord has asked for a £50,000 down payment. He'd like 50k when we sign the agreement. And I looked at it and I thought, that is still a fantastic deal. It's not no money down, it's £50,000, but, and this is the principle of cash flow, my portfolio can pay that for me. My portfolio can pay £50,000 to this investor. And the way I look at it is, that's 25 properties. Am I happy putting £2,000 in to buy one property? Of course I am. this portfolio is going to spin off more cash for me every single month. So I'm okay putting a bit of money in. The portfolio itself is millions of pounds. To put 50k down to get millions of pounds of property under my control permanently, and then to buy that over time is well worth it. So these are often no money down deals, and they bring cash flow in from day one. Now, because we're doing it over time, and this is where the length of time and why you should watch the video about the deal equalizer, this length of time that we inject into the deal has two effects for us. The first is that it gives us time to pay down the debt. So it gives us time to pay off the balance of the purchase price. But secondly, it also gives time for the property to go up in value. And so the brilliant thing is that even though today we might be paying market value or even above market value, in the future, we've actually got a below market value property. And that's the exciting thing about this. We almost force that below market value purchase in the future by giving ourselves the time, by paying off the capital, and by allowing enough time for capital appreciation to happen. And even if there's not enough BMV in the future, enough below market valueness, enough equity built in, that's fine, because we make all of these agreements assignable. So if you've agreed to buy a property for £200,000 and you hope it's going to be worth £400,000 at 15 years in the future, and over the 15 years you pay off 50k, so now you owe 150, but actually it doesn't go up to £400,000. Perhaps it doesn't even go up at all and it's still only worth 200,000. That's okay, because now you owe £150,000 on a £200,000 property. That's probably not enough to buy it. You know, if you bought it and then tried to refinance, you're probably not going to get all your money out. You might do, but let's pretend that you wouldn't. What you can do is you can just sell it on the open market for £200,000 and you make 50k. That's a decent deal. You've had monthly cash flow for 15 years, and then you get a nice balloon of 50k at the end. And so these deals, these control now, pay later deals, are very, very safe, which, as you know, if you've watched many of my videos or if you've listened to my podcast, I'm very risk averse. A lot of people see the deals that I do and see the numbers involved and think that I'm quite adventurous and I'm quite comfortable with risk. I'm actually very risk averse. I want stuff to be boring. I want it to be as safe as possible. And when talking about safety, let's come on to the fourth benefit for us. So we've got the three benefits of the vendor. The fourth benefit for us is it's not even us paying off the property. If you think about it, who pays off that equity over time? It's not me. I don't put my hand in my pocket. It's the tenants, it's the occupiers of the property. So the tenants are paying the vendor over the 10 or 15 years on our behalf. It's a brilliant deal. So we don't put any money down up front unless we choose to. We get a monthly cash flow in our own pocket. We make money off it. We get a BMV purchase in the future, and the tenants pay off a chunk of the equity over time. Absolutely brilliant. And when you start looking at the deal equalizer, you'll realize that actually it can be zero in the future. You can actually pay off the entire property purchase price over time if the numbers work on the deal. And so you can actually get to the point where there's nothing left to pay. You just own the property unencumbered at that point in the future. And so if you haven't yet done a control now, pay later strategy, I would strongly suggest you look into it, you learn how to spot those opportunities, and then you start offering a control now, pay later strategy as a solution to your vendors, because a lot of vendors will say no to a below market value purchase price, but when you give them the option of a control now, pay later or a BMV offer, they'll often go for the control now, pay later because it is that attractive to a vendor. Guys, if you've enjoyed this episode, hit the notification bell, then you'll be told each and every time I record a new episode. Click the subscribe button, and if you have questions, pop them in the chat box below, pop them in the comment section below. We will respond to them, and if we can help you in any way on your property investing journey, then do get in touch. Until then, happy investing.